So we look at things like we compare what the 1 month skew is on Bitcoin versus Ethereum. Is there any differential between the skews? Is that telling us anything about the perceived tail risk? Remember what skew's telling us, right? We covered this again in the intermediate course. Skew tells us the perceived tail risk in an asset. And if we're seeing skew materially changing in any asset, we need to pay attention to that. We need to think about why that might be. And if we're seeing a divergence in skew between two assets like Ethereum and Bitcoin, then why is that happening? Why is the market willing to pay up more for Bitcoin puts than it is for Ethereum puts right now, for example? Is there a rationale? Is there a reason that makes sense to that? If there is, then that's information in itself. But if you don't think there's a reason for it, then maybe there's a trading opportunity there. Maybe the flow has just pushed it one way and you want to fade that flow because you think those two have got a very tight relationship and they're going to mean revert towards each other. So those are the ways we can look at skew and kind of trade around skew. And actually in crypto markets, because they are still quite new, they're not that mature, they haven't been that liquid for that long. They only really got liquid in options in 2020, if we're honest about it, right? They might have existed before then, but they were much wider markets. But now I've been watching these things since 2020. And one thing I have to say is, and I look at cross-asset vol, I look at all asset classes. Crypto, by far and away, has the most volatile skew I think I've ever seen, right? And I think it's because there's not as much structural flows because there's not as much institutional adoption, right? So it's not like a multi-trillion market that has loads of institutions playing. They sit on their positions for years, months and years, and against those positions, they have structural hedging to do or overwriting to do that just comes every week, every month, whatever it is, and it structurally kind of distorts the skew on the curve, right? On the vol surface, it just keeps the skew around a certain level. Now, that certainly happens in equities and probably in a lot of commodities as well. But in crypto, not so much the case. So we did start to see a bit of that flow in crypto. We saw a lot of overwriting in Ethereum, but it kind of came and went, and it's not as prevalent anymore. And because Ethereum's now got narratives attached to it, it becomes a lot more dangerous to sell calls on that thing systematically, right? It hasn't actually been very profitable. Our friends at Amber Data put out a vol report recently, and they said, yeah, if you did short-dated call overwriting on Ethereum for the whole of last year, you didn't actually make any money doing that. So it has not been profitable. And when things are not profitable, chances are people kind of are going to stop doing it to some extent. Yeah. But I think the reason is because a lot of crypto option trading is very speculative, right? So people are using optionality in crypto to get exposure to crypto, to stay safe, to know what the premium spend is, not blow themselves up. But when they do that, what you often get is you get a lot of chasing going on. So you get a market move and everyone wants to chase that move. And because they don't want to chase the move in the spot market, they don't mind chasing it in the options market because they're just throwing a bit of premium at it. That's what happens. And then the out of the money options actually start to trade and they start to pull the skew in one direction. So often if you've got a big spot directional move, that will often drag the skew that way because it will suck in a load of speculative options trading and the skew will go that way because there's nothing else to offset it. So that is something that I've noticed a lot in crypto, particularly in the front end skew, which is very fickle and it moves like with the market very, very quickly. And it's very volatile. So I think that's quite a good tradable asset, actually. There's quite a lot of things you can do there. There's a lot of signals that you can get out of it, and you can fade those moves if they get extreme. So there's good opportunities in trading crypto skew, and that is something that I have done over the last few years.